Welcome back to Market Fatafat, and taking a look at the benchmark indices. Some bit of a recovery in the last half an hour or so is what we have witnessed. Nifty is down just about 140 points and recovered from the day's point, and similar is the case for Bank Nifty, but still having the declines of around 300 points. Reliance is lending support for the Nifty 50 index, and a lot of the broader market space is also supporting because the mid-cap index is once again back into the green tree. So that's a quick update on the markets, but let's talk stock specific then and shift focus to Apollo Tyres then. This counter is focus after Morgan Stanley's note where they maintain an equal weight rating with a target of 475 rupees is one of those tactical ideas by Morgan Stanley. They believe that the share price is expected to fall in the next 30 days, and inventory price in commodities is rising, negative cuts by the multiple players, and even on the 12-month forward valuation, Morgan Stanley finds this stock expensive a little bit, and this coupled with the rising commodity prices could lead to the margin pressure, and that's why Apollo Tyres is in focus. Nevertheless, with the market movement, it has recovered from the day's lowest point at least.
Okay, that's Apollo Tyres. Let's move on and bring on board also our technical analyst. Now we do have Chandan Taparia joining with us. Chandan, very good afternoon, and let's start with your stock then. HAL making the list of all the analysts again. We've already seen a good run up in defense. What's your view on HAL? Still a positive up move that one could still expect?
Yeah, we have positive on the HAL, and one of the strongest counter. Even after the geopolitical concern, the stock is holding well, which clearly indicates the outperformance of the nature. We are quite bullish, looking for 15-20% up move positionally. But looking at the immediate point of view, technically the stock has given a breakout from its pole and pattern. So expecting a run up towards 3850, one can buy with support of 3600 in counter. So with 3600 support, one can look at 3850 as a target.
3850 as a target, 3600 as a support. Let's keep an eye out on HAL. Let's move on, talk about Varun Beverages. Morgan Stanley has initiated coverage on this one. Overweight rating. Price of 1,701 rupees per share. Today the stock buzzing away in trade. At one point of time we did see a slight bit of a dip, but look at the recovery again coming 1.7% uptick. Let's not forget what Morgan Stanley also highlights, and we know that Varun Beverages has a solid track record in terms of scaling of the domestic as well as global opportunities, as well as in terms of strong profitability. I believe that the company will continue to outpace the food and beverage industry, and in their view this fits out well in terms of the preference for mass discretionary name 2024. Over the next 3 years, they expect Varun Beverages to see a growth of around 19% in terms of CAGR and 23.7%. So let's keep an eye out on that. The stock is better placed than its peers, trading at 15 times FY25 EPS. Interesting one to watch out for. Let's not forget, a couple of days back we had seen the Gorakhpur facility. Also, they've started operations on that front as well. So interesting to watch out for Varun Beverages. Morgan Stanley's preferred pick in the staples is Varun Beverages.
Right, that's about Varun Beverages, but Chandan, let's talk about one of your companies, that is Cummins India, trading in green today. Tell us what are the next levels we should be watching out for.
Yes, a couple of capital goods are doing well, and Cummins is one of the strongest name. Technically speaking, it has been making high tops, high bottom on the weekly and the daily scale. It has given a breakout by holding well above 3050, 3080 zone. So expecting fresh run up in the stock, one can buy with support of 3040, and here we have a target to us 3250 in the counter.
Okay, surely keeping an eye out on Cummins India. Let's move on. Snehi, Transformers and Rectifiers, this reported its numbers last week, I believe, but today what's the reason? Why is the stock buzzing today?
Well, Vinny, the stock is in focus because it has received a withdrawal of stop deal letter from Gujarat Energy Transmission Corporation Limited, which is GETCO, intimating GETCO has withdrawn the stop deal with the company with immediate effect. This now means that this company can go ahead and become a supplier for GETCO immediately, and on the back of that, the stock right now is in upper circuit up 5% as we speak.
Right, moving on then, and Chandan, let's talk about Motherson Sumi. With the announcement of Tesla coming into India and Elon Musk's visit nearby, the stock is really excited. Tell us more on Motherson Sumi on the technical. And what are the levels that you're watching?
So we have seen consolidation out, and the stock is holding well. One of the strongest name in auto and solution. So momentum could continue with support of 121. We are expecting a run up to us 130.
Okay, keep an eye out on those levels for Motherson Sumi. That's to watch out for. Gaurav, steel strips wheels, that's the one we are keeping an eye out on, up and buzzing away in trade, 2% gain. And in this market, when we're seeing so many stocks buzzing, there has to be some very good reason.
This stock is buzzing because the company has signed an alloy wheel supply agreement with the leading PV OEM, which is passenger vehicle OEM company. Now, what they have believed is that this order actually reaffirms the strong relation that they have with the customers and also reaffirms their ability to meet and exceed the expectation. Now, why this deal is important is that because if you look at of the stats, so companies 28% of the revenue comes up from the alloy wheel segment. At the same time, company had also indicated that they will increase this capacity by 6 lakhs unit in Q4 FY24 itself. And at the same time, companies has also indicated that they will expand this capacity almost 60% and it will reach to 48 lakhs wheels in the phased manners in the coming years as well. Talking about the capacity utilization, as per 9-month FY24, it was at 100% capacity utilization, and given that now they gotten a new order, it will be really interesting to see how the company pans out when it comes to alloy wheel segment for the company.
Alright, that's about steel strip wheels, but ONGC is seeing no stopping. Even today, one of the top gainers in Nifty 50 today. How strong is the chart, and can we look out for 300 targets?
Yes, we are looking for 300. Given a long consolidation breakout of last 25 trading session, holding well above 50-day exponential moving average. We have seen huge build-up of long in derivative side as open interest headed by around 10%. The volume is significant. Today it's turning to 7 crore daily, which clearly indicates the rising participation even at higher levels. So you can buy with support of 278. Stock has potential to towards 300 plus zone.
Right, that's about ONGC, but let's move on. Let's talk about GTPL Hathway, because the earnings seasons have kick-started and we have got the numbers for GTPL. Looks like a decent set this time by the company, where if we talk about the revenue, that has seen a jump of 16% on a YOY basis. If you look at the profit figure, the company has actually come out in a profit figure this time versus a loss figure this time. So indeed positive for the last year. Yes. So 13 crores is the profit that the company has reported this time. But the margins were actually not much impressive. 15.9% was the margin in the last year, and this time it's 15.7%. So basically, because of the no significant jump in the margins, we are seeing that the stock is not reacting much to that, trading flat as of now.
Okay, trading flat as of now, a slight bit of a negative that's there for GTPL Hathway. Let's keep an eye out on that. Chandan, Escorts Kubota, what's the view on this one? In terms of overall last 6 months, when we're looking at Escorts, nothing exciting, right, in terms of an up move, no positive return. Now, can we expect something positive coming for Escorts Kubota on the technicals?
So now it seems that some exciting time will be here, because on the trading session, IMD came out with the prediction of the better monsoon, and the agri-related counters will be in budge. So Escorts is one of the same. We've seen a consolidative move in last couple of weeks, couple of months, but now it seems that momentum could continue. So there is a reason we are looking for some positive stance. Buy with support of 3,000 and looking for a rally to us 180 kind of levels.
Surely keeping an eye out on those levels over there. Let's move on, and Cipla is the stock that I'm going to talk about, not Shrishti today, but yes, I took it before you, the pharma pack, but Cipla has announced that it is a wholly owned subsidiary and consumer healthcare arm of the company, that is Cipla Health Limited, has signed a business transfer agreement. It's going to be for the purchase of distribution and marketing business of undertaking cosmetic and personal care business of Avia Private Limited, and this is the Astaberry brand, Akin, as well as Bhimsaini brand, which is there, and it's on a worldwide basis. The acquisitions for around 130 crores on a slump sale basis. Interesting to watch out for. We saw a bit of a spike up coming in, but then post that, even it's quite flattish today. Cipla, what is trading at?
All right, that's about. Let's talk about GAIL. Chandan, similar move like ONGC. GAIL also no stopping for this counter. Tell us how you're looking at the breakout in GAIL.
Yeah, so GAIL is continuing making high tops, high bottom on the weekly chart from last 4 weeks. We have seen a decent run up from 165 all the way to 205, 207. So momentum could continue as the trend is intact. Support gradually shifting higher. Earlier it used to find a hurdle at 196. Even the higher base is being placed at 200 zone. So with support of 200, we can look for an upside move towards 220 in the GAIL.
Okay, let's move on to the next stock for today. Stock number 33, and you're going to highlight Jio Financial Services for us. This one also focused today, and I believe there's some tie-up that they've done.
Absolutely, Vinny. They have inked a 50-50 joint venture with BlackRock Advisors Singapore Pte Limited, which is a subsidiary of BlackRock. And they've signed an agreement to go ahead and incorporate a wealth business, including the creation of a wealth management company and subsequent incorporation of a brokerage company in India. Now, what's key to remember is that this is not the first collaboration that Jio Financial has done with BlackRock. They had done one collaboration back in 2023 as well, July of 2023, to transform India's asset management industry through a digital-first offering and also to democratize access to investment solutions for investors in India. So, back of this, a fresh tie-up that Jio Financial has gone ahead and inked with BlackRock. Stock is up 2.5% as we speak.
Stock is up in today's trading session. But Chandan, one of the liquid counters, that is UBL, is been holding on to good gains at least since the start of the year. Talk to us about move in UBL and your targets.
Yeah, so UBL has seen decent recovery from lower levels, holding well even after the market decline, which clearly indicates inherent strength of the counter. So looking for a next leg of rally once it manages to hold above 1850 zone. So in the preempt, we can go for buying side, recommending to buy with support of 1820, looking for a run up towards 1920 in this stock.
Okay, keep an eye out on those levels over there for UBL. Let's move on to the next stock. And Gaurav, you picked out Caplin Point. Why was this stock in focus today? What is it currently doing, and what news from it?
Well, yes, Caplin Point is yet another pharma stock that is in today. Now, because the company has got a final approval from US FDA for abbreviated new drug application, which is going to be in the form of eye drops. Now, these drops will be used to treat the eye infection that will be caused during conditions, conjunctivitis and other conditions. And if you look at the market data, specific drops that the company has got approval for has sold almost 52 million worth of stock in 2023 itself in United States. And on back of this news, this could be another breakthrough for the company's revenues. And if you look at the stock performance also, it was up almost 1.5% in today's trade. So definitely keeping an eye on this company and see how it will work for the company in the days ahead.
All right. Once again, let's focus to the all of the oil and gas sectors, and feels like China has got all the breakout candidates. And talk to us about Petronet LNG. Chandan, 312 is what we are seeing. What are the levels?
Yeah, so I have selected most of the stock which are doing well and the breakout. I believe the stock which are outperforming are likely to outperform, especially the market which is falling down by 600-700 points higher levels. The reason that I have selected either with the theme or taken the stock based on their breakout, open interest, volume surge activity. So yes, Petronet is one of them and holding well, formed a strong bullish candle. We have seen some unwinding and put writing activity. So with support of 300, one can look for an upside move towards 325 in the Petronet.
Okay, surely keeping an eye out on those levels over there for Petronet LNG. But let's move on to Wellspun Corp. This stock is in focus today. Now, why is that so? A bit of a decline that what we're seeing in the stock price. Now, Wellspun Corp said that they raised around $15 million claim for an order cancellation by CSC. Now, Wellspun Corp said that the US-based customer CSC had cancelled the orders from 2022 and they had raised the claim for the same. Other than that, what the highlight is coming in now, the court, the Superior Court of the from Delaware, United States, had said that this agreement that signed, that claim for this amount as well, and now the company's view is that the claim amount, as mentioned, is actually expected. Wellspun in terms, they will get this amount at some point of time. We're keeping an eye out on that. The claim recovery is mainly related to raw material exposure. So let's keep an eye out on that. That is resulting in a bit of a subduedness stock today in trade. As of now, down 1.5% to 1.6% in trade.
All right, but let's talk about Swan Energy. Snehi, tell us what's the news flow out here and why is this counter is in focus?
Well, this counter is in focus and has been a bust since morning. Flat right now, but it was doing pretty well for itself since morning on the back of an acquisition. They've gone ahead and successfully completed the acquisition of Reliance Naval, and Reliance Naval will also be getting listed on the exchanges going ahead. This acquisition was done through a special purpose vehicle called Hazel Infra, and Hazel Infra is own 95% of Reliance Naval, while 5% is going to be held by GAIL shareholders. Swan Energy owns a 74% stake in Hazel Infra and 26% is owned by Hazel Mercantile. Now, on the back of this, equity ratio, the ratio is 1 equity share for every 275 equity shares of Reliance Naval that its shareholders held earlier. So, on the back of this news flow of this acquisition coming in, and also Reliance Naval getting relisted after the entire deal is done, the stock is not doing much right now. Earlier it was a buzz in today's trading.
Surely keeping an eye out on Swan Energy. Let's now talk about Astral then. And Gaurav, why is Astral in focus today?
Astral in focus because as per sources now a large demand order is expected to come from the realty segment for the company. If we look at the channel checks that we have seen so far, the primary dealers are seeing 15 to 25% increase in the inquiries for Astral pipes. At the same time, demand is coming up in the plastic pipes specifically, and the overall PVC pipe segment, if you look at the stock prices and the pipe prices, they have actually remained currently stable. Lastly, look at the industry growth. It is expected to be for Q4 FY24, it is expected to be somewhere in the range of 20%. And now on back of this news flow, if you look at the stock performance also, it is up almost 1.5% in today's trade. But definitely keeping an eye on this stock and see how the order book and order inflow for the stock will remain for Q4 FY24.
Okay, surely keeping an eye out on Astral, but that was the stock for today. So thank you so much, Gaurav, Chandan, as well as Snehi for joining in with us on the show. It's a pleasure having you all, as well as getting insights in terms of which stocks are important to watch for. But let's move on, and we are learning from market sources that potential institutional investors for Vodafone Idea's 18,000 crore rupees follow-on equity offering includes Rajiv Jain, who's the partner at GQG, as well as some key global as well as local asset managers. Anurag Joshi joining in with us with more details. Anurag?
An important ongoing case in Supreme Court regarding the standard treatment charges. Now, non-life insurers will also request Supreme Court to make them party in this case, because non-life insurance plays an important, crucial role in treatment cost through.
Okay, we'll just come back with that. There was a non-life life insurance that we were talking about. But, let's look at the market, right, Shrishti? Because Reliance surely seems like is supporting the market. That recovery from the day's lowest point at such a heavyweight seeing a recovery. So that's something important to watch out for. Reliance Industries surely has seen an up coming in. Other than that, what today is holding on to gains for the Nifty 50. Where we are seeing some bit of an up move is from Eicher Motors. That's managed to hold on. And we did speak about ONGC. Chandan was talking on the charts as well. Lab, HUL today. Excitement coming in for HUL. HUL is one of the names which have not seen much of a move. But yes, and look at Reliance. Hoping for a better move there as well. But Reliance surely seeing a recovery there as well. But jewelry segment, that seems like a lot of excitement there. When Kalyan came out with its Q4 update, it was exciting trade. Senco Gold has been excited in trade. And today we did have Kumar Mangalam Birla speaking at a launch of Aditya Birla Capital Digital Tech app, where Kumar Mangalam Birla actually mentions that he is planning to launch a jewelry business shortly with an initial investment of 5,000 crores. So a lot of excitement there. Listen into what more he had to say.
As we advance into 2024, the launch of two new consumer-facing ventures marks the group's commitment to constructing a growth platform characterized by a unique confluence of strength and breadth. Just last month, we launched our paints business with an initial investment of rupees 10,000 crores, as you know, and in a few months, we will be launching a jewelry retail venture with an initial investment of rupees 5,000 crores. The ABCD D2C platform will further help ABC augment its digital footprint. It will acquire customers digitally and, more importantly, at scale, cross-sell and upsell in a frictionless manner, and become a full-stack financial services provider. And the plan is to acquire 30 million new customers in the next 3 years.
Moving on then, and time now for some interesting opinions on the markets. Now the views from DSP Mutual Fund's Vineet Sambre. He believes that the near-term outlook on the Indian equities looks challenging. Listen in.
The long-term outlook for us remains positive, and generally as fund managers we tend to remain biased towards equity. So I think that is what drives our long-term view. But I think the near term clearly is looking a bit more challenging, and let me just lay out few of our thought process how we are thinking about the near term. So I think clearly we have come out with a very strong growth phase over the last 2 years or 3 years in terms of the earnings momentum, and we saw that these earnings were really driven by in the first phase was top line driven post the pandemic, and then in the second phase the margins expansion actually story in favor of driving the earnings. But what we are seeing now is the top line seems to be moderating across the board across most categories, except let's say the industry engineering. Some of those tend to do well, but excluding that, I think that the top line is moderating, and now most of the benefit which came because of the commodity cooling off, those I think are also going to get challenged over the next quarters. Banks are still looking at decent valuations when we compare it with the long-term averages. More importantly, the asset quality profile of the banks are still pretty decent as of now, and we don't think that there are any data points which are suggesting that there could be meaningful deterioration going forward. I think that is a one strong point, and it is okay in a bit of a slowing phase when the banks could also moderate in terms of the loan growth. Their NIMs may also lead to maybe lower growth in terms of PPOP, but till the time the asset quality is intact and they have the long-term growth prospects, we would want to participate in the banks, because banks is another way of participating in this India growth story. It is proxy to the broader economy, and we would hence remain constructive on the banking sector. At the moment, though, while we are also cognizant of the fact that the banking sector may go through a bit of a slowdown, we are trying to look at the NBFCs within the lending franchises, where I think the growth matrix will still be okay, and one look to have slightly higher exposure on NBFCs versus banks at the moment, and then maybe over the course of next 1 or 2 quarters, one can look at these allocations again. I believe that over the next 2 quarters, as we go through this election, which you mentioned, I think because of the model code of conduct, there could be some moderation again in the order booking, and I mean there we may see some bit of growth, maybe cooling off a bit. So I think all considering that and the global macros which are worsening, I would say that market could enter into a phase of consolidation over the next 1 or 2 quarters, and after that maybe it will sort of seek the directions depending upon how the reforms they talk about and how the consumption basically recovers from where we are today.
Surely those are important highlights coming in the conversation with Vineet Sambre on the markets. But like we were talking about Vodafone Idea, market sources are saying the potential institutional investors for the 18,000 crore rupees follow-on equity offer that would include the names like Rajiv Jain from GQG Partners. But for more details, let's go across to Anurag Joshi, who's joining with us. Anurag?
So Vodafone Idea's 18,000 crore rupee follow-on public offering, which is the biggest such equity sale in the country, opens for anchor investors today, and a slew of investors are lining up to invest in the offering. And our sources have told ET Now that some of the investors include Fidelity, GQG Partners, which is run by Rajiv Jain, Aditya Birla, Sun Life Mutual Fund, HDFC Mutual Fund, and these are seen as possible investors in the issue. And ET Now had reported earlier that Vodafone Idea had already secured the commitments from the institutional investors for the upcoming sale, and this issue is open for the public from April 18 to 22. Now, yesterday the management told the media that about 5,700 crore rupees of the issue will be used for the 5G rollout, and following the issue there will be some change in the shareholdings of the key holders, which is the government, the Aditya Birla promoters, they have equity, and the Vodafone PLC. The government holding is going to come down from about 33% in the company to 24%. Aditya Birla promoters who are holding about 18%, their shareholding will come down a tad, but they will continue to hold above the key level of 15%, and Vodafone PLC's holding also reduce because of this.
Okay, Anurag, thank you so much for these details on Vodafone Idea, the follow-on public offer that is going on. So yes, we'll keep an eye on that. But with that, we're absolutely out of time on this edition of Market Fatafat. It's a goodbye from Shrishti, myself, as well as the team who put the show together.